Hey, what's up everybody? Welcome to the Average Joe Dividends YouTube channel. In this video, I let M1 do the stock picking for me based upon my allocations. And what we're looking at right now, this is my taxable M1 stock brokerage account, my Average Joe Dividends portfolio. We can see the current balance at 273,475, and this is going to be changing as the markets are live. We can see the performance over the last year at 30.92% that we're up. And we can see where we started at. We were at just about $200,000, a little bit over that. And then we had some dips into the 190s and then went all the way to 243, had another dip here to 228 up. And you can see there's a couple dips. And just let you know, when you're an investor, especially if you're a new investor, it's hard to invest into these dips because you don't know where it's going to go. You think that the world's ending and it's just going to keep going down, down, down. But lo and behold, there's a turnaround. And what we can't do is we can't predict these, the bottoms of these. So that's why I recommend to dollar cost average. A lot of the experts recommend that too, is just to dollar cost average into your investments. Of course, I can't tell you what to invest in. The purpose of this channel is to just chronicle my journey with this portfolio mainly and just show you how it's growing as well as how the dividends are growing over time. And we can see here we're on a new tear here, a new high into the 270s. I can't believe it. My thumbnail for YouTube says 260,000. Just recently it was 250, and I'm afraid to change it to 270 because one bad day can push us right down into the 260s again. So I'm just going to leave that there. So you can see the performance of the portfolio is doing great, but not only does this portfolio go up in value, but it also pays dividends. We're going to go into that in just a little bit, but I'll leave a link below so you can see what's in my slices. And I have them divided up into ETFs where I have BST and SCHD, which makes up most of the portfolio. And then I have 50 other positions in here broken into the dividend portfolio and 12 more dividends. And we will get into the holdings, and I'll show you on the holdings tab when we grab some data. I'll scroll through it slowly so you can see what I have in the portfolio. So let's jump into the activity log, because the purpose of this video is to show you where my $100 went. So I deposited $100, and we can see there's 5 buys, but one of those is going to be a dividend reinvestment from Illinois Toolworks. You can see that I got a dividend on the 11th. It actually showed up in my account on the 12th, and the markets weren't open. So this is the first opportunity to deploy this. And let me go back to the portfolio and kind of show you, when I make a deposit, what's going to happen is it's going to go into the underweighted portion of this portfolio. We can see we're overweighted in the ETFs. We're underweighted by 0.1% in dividend portfolio, and we're underweighted by 0.2% in 12 more dividends. So best guess here is, the money went right into here in 12 more dividends. I'll show you what's in this real quick. NVIDIA has been tearing it up, and it's been a great investment for me. You can see just in the last year, alone, up 200% for me. Oracle, not too shabby. KKR has been doing really well with 127% increase. And I don't know if I have anything that's even down, but everything in this portfolio, I used kind of a different metric to pick these companies over the other slice, and I'll show you that too. But just you can see the performance just over the last year has been outstanding for these. So whatever is underweighted in here is going to get the money. And you can see NVIDIA is overweighted, and I keep having to change the target because the actual just keeps going up and up. And I'm thinking about maybe put it to 26%. Because I'm never going to buy NVIDIA, at least in this portfolio, because it just keeps going up. Of course, I do have portions of NVIDIA in indexes that I own, so I own it elsewhere. So let's go back to the activity log, and we can see the 5 buys, but 4 of them were based upon where we were underweighted in the 12 more dividends portion. So it looks like most of the money went into Union Pacific for 38.56. We'll see how much of a share or fractional share that purchased. It bought me 0.15895 of a share, but I'll show you that every little bit counts. Even fractional shares do make a difference. And this is a dividend drip for Illinois Toolworks. So I picked up 0.03276, so just a tiny fraction of a share there. And then next up, Allstate for 18.42, and that bought me almost a tenth of a share, 0.09803. And then American Express, 31.95, and that bought me 0.11555 of a share. Go back in. It's kind of tedious going back and forth. I wish it would just go back to this screen each time. And then A.O. Smith is the last one for 11.08, and that bought me 0.13576 of a share. So we're going to bounce on over to my Google Docs spreadsheet, and we're going to look at the current dividend income there. We're going to look at these buys I did as far as their current dividends, and we're going to see what those are going to be. Once I update my sheet, I'm going to grab some data from the holdings tab as well from M1, and what it's going to do is it's going to change those values as well as my forward income. So we'll push that up so we can kind of see it a little bit better. I'm going to zoom in a little bit better because some of you guys have said it's kind of hard to see this. There's a lot of data on this sheet. So let's just take a look at this sheet. I'll explain it really quickly. It has the company ticker symbol, the share price, which is utilizing a Google Finance function to pull that share price live. So we'll see this changing as the markets are open on a Monday morning. Here's the average share price that I've bought into. Here's the number of shares I own for each of these investments. Here's the current market value. Here's my cost basis. Here's my gain or loss, including dividends. And here is that gain or loss expressed in a percentage. Anything above 25%. 25% or above will be in green. So we can see with Starbucks, I'm up 12.56%, which is less than 25, so it's in the white. And then here's the quarterly dividends for each of these positions. And SCHD is variable, so I have that in purple. And then these are monthly payers with Realty Income and BST. And here is the current yield percentage if I were to buy more shares of each of these investments. And here's the yield on my cost. You can see with Costco, I roughly doubled my money and roughly doubled my yield on cost. And so my money in essence is making a 1% if I with my investment. If I had bought it now, my yield would be at 0.52%. You see how that works? So here's the next dividend that's due to me. And since we already paid this, it's going to pay me in about 3 months. Costco will approximately November 10th, right around that date. With that new dividend, here are the total dividends as well. I keep a track of those. So once I get that 297, I'll put plus 297 there. And then here's the dividends paid. We're going to scroll down to October since we're in October. And you also see I put in Union Pacific, their current dividend, and we're going to see that go up. And as well as Allstate is at 578. That's what it last paid me on the 2nd. And then with the dividend drip, it went up to 581. We're going to see it go up even more since I bought more fractional shares there. And we can just do a quick count up of the dividends I've received so far. 57.98 is the total count for October, and there's a lot more dividends coming. And you can see on the 16th, which is 2 days from now, I will wake up and get a Fifth Third and O Realty dividend, those two, so it'll be 32.25. And I went into M1, I checked and to see what those dividends are going to be. You can check it once. I'm not sure how many days it is past the ex-dividend date, but M1 will show you that. But I don't put the dividends in there until I receive them. So then what I'll do again, the 1914, I'll put plus 1914 here to keep a running total. And then also I track the increases from the increases that are announced. Like Costco last April, I'll scroll over here, they announced a 13% dividend increase. And I think anything above 5% is in the green. So it's a nice increase. Hopefully next April, Costco will do the same and do another double-digit increase in their dividend. And one pattern you'll see is the lower yielders usually have the higher increases, and the higher yielders, like a Verizon, over 6%, they had a 2%. They kind of seemed like that's where they're kind of fixed for their dividend increases. You're not going to see like a 10% dividend increase out of like a 6% dividend payer. That's just not how it goes. So I'm going to scroll down here. We can see what this portfolio pays per quarter, almost $3,000 at $29.7965. We can see the current yield. It's just the average yield of this portfolio. Here's the average yield on my cost. So I'm yielding 3.45% essentially from my money. And I know I could put everything into Verizon and get nearly double that, but that's a bad idea to me because I need more than 2% dividend increases. That's not enough to really keep up with inflation. So that's not good enough for me. I want something that grows aggressively. I should probably calculate the whole average of what the increases are. I think I have before, it's like 7-8%, and that outpaces inflation, at least at this day today. And we can see here that in the blue here, I have to account for BST and O since they're monthly pairs. And to get the quarterly total, I have to pull their values from this table and then times them times 2 here to get those quarterly total amounts. Here is what the portfolio is paying per month on average. And I say on average because the first and second months of each quarter pay the lowest, and then the last month of the quarter, which is over here in the greens, the March, June, September, December, that's the big months that pays. Right now, it's over $1,500 a month, and then the smaller months are paying between, it's right around the $600 range. And then we're going to also see the quarterly and annual is going to change. This will go up as I import the data from M1. We're going to do that in just a second. And something happened with SCHD. I should go back to the activity log. I kind of showed it. I kind of glossed over it. You can see where 1,191 shares were pulled out of my account of SCHD. What they did was they I don't want to say they deleted it, but they subtracted those shares at the higher amount when we were in the 80s, and then added in the 3573 of the shares at 1/3 the price. Essentially, they tripled my shares essentially, but they also divided the dividend, and the stock price is divided by 3. So really, I'm just left with the same. I have the same value. I'm going to get the same dividends, but I think it could be argued there's a psychological component to it with SCHD being, quote, cheaper. At least the share price is lower, but it carries 1/3 the weight. And we're down to 28. We were at 84. I've changed that. Yeah, I updated my high water marks. It was like 84-ish before the split, the 3-for-1. But you can see on the 11th, that was right after the split, I think. Yeah, I put the new high water mark for SCHD. We've gone on to even higher highs for VTI and SCHD. I like to gauge that in the future. I may use this as kind of the high water mark. If we're at a high water mark, it's probably safer to withdraw from the portfolio. That if we're minus 10 or 15 or something like that, probably have to grade it. Maybe it's time to burn a little cash. So that's why I kind of track that. And then the reason I have these 3 tickers are Pinnacle West, Exxon, and AbbVie is those 3 are due to increase their dividends in the month of October. So we're going to see those go up as well. So I'm going to go over to the Holdings tab and grab that data so we can update my dividend portfolio sheet to show the new income. And we're also going to do some historicals and go over that as well. So everything on this sheet is arranged from the largest value to the smallest. We can see there's 52 positions in this portfolio. Here's my cost basis, current value, unrealized gain, and that does not include dividends. And then I'm going to grab everything from the name column. We're going to import this into my Google Docs spreadsheet. And if you're curious, I'll leave a link below so you'll know exactly what's in this portfolio and you'll know the allocation that I have for each of these positions. So we've grabbed all that data. I'm going to go back here, and now we're going to paste this into the M1 data tab. What's going to happen is the values of the 5 positions where I bought more fractional shares into, those are going to go up because it's going to add fractional shares into those 5. And it's also going to change the average share price as well as my cost basis on those 5 positions. We're also going to see this change over here, the new dividend for Union Pacific, Allstate, which just paid, and then American Express and A.O. Smith. So we're going to go ahead and paste that into the M1 data tab. And it's also going to change the monthly and quarterly and annual dividends as well. So pay special values only, everything goes in this A column, and it changes the shares, cost basis, and average. I'm just pulling that, extracting that data from this column essentially, and then doing VLOOKUPs to pull the new data over there. It's pretty simple. You can, like I said, I'll leave a link below for the sheet so you can see how I did that, how it pulls with the VLOOKUP. You can see right there, there's the function pulling from the M1 data tab for all that. Same with the shares and the cost basis. That's all it's doing. And then we're going to scroll down. We're going to see the first change, which is going to be the new dividend for Union Pacific at the end of December is going to move from $5.35 now to $5.57. And then Allstate, it was at $5.81 actually over here because of the dividend drip, but now it's at $5.90. It will be the new dividend, and that's going to be in January. So we've seen our last 2024 dividend from this subset here, except for the monthly pairs, which are O and BST. And then next up is American Express going from $4.51 to $4.59. Not a big jump, but again, I deposited $100, and it's going to just move these just a little bit. But as I do these buys twice a week and drip those dividends in, it adds up, as well as the dividend increases with these companies. It just keeps snowballing. And I'm not trying to do this all in a year. I've been doing these videos, I think, since January 2021, and I'm trying to show this over a long period. And, you know, these tiny little moves, they're going to add up over the next year, you know, or 5 or 10. You're going to see these values be way higher. And that's the purpose of these videos, is to chronicle this. I'm hoping people will see this either now or in the future and go backwards and see all these and see how this portfolio has just gone up and up. So we can see we've counted for A.O. Smith, a new one will be 424. And then here is the results of that $100 deposit, as well as the Illinois Toolworks drip on the monthly cash flow average. Of course, quarterly and annual changed too, but it went from $993.22 to $993.38. And we're going to go ahead and we're going to take that data, the $993.38, we're going to put this on the monthly average dividend tracking tab. We'll scroll all the way down here. We'll put the 993.38. Very modest gain. Of course, it was, again, $100 deposit plus Illinois Toolworks dividend drip. So that added to my monthly income 16 cents going forward for those buys. And again, this portfolio is also about stock appreciation as well. So it's not just the dividends too. I mean, I'm trying to do both. I'm trying to pick companies that increase in value over time and increase their dividends as well. So, and you can see just all the things that I track on this ledger here, and it's the good and the bad. You can see it with SCHD's Q3 dividend announcement. Wow, it was really good news that the dividend increased by 10 cents from a year prior. It was lower than Q2. But with SCHD, what you need to do, though, is you need to count up the entire year. You can't really monitor SCHD's performance with its dividend by one quarter, especially Q1, which is always the lowest. So I'm predicting in Q4 it's going to be higher. It's going to go back probably to 80 cents. And these quote losses here are going to be quite temporary. But you can see though I'm adding here slowly, and you can see just in this subset I've selected 768. We'll just look at just from October alone, I've clawed back $7.09 of it to the dividend income. Again, this is temporary with SCHD, and but I like to explain it though. I'll show if there's a loss or if one of these, like Lockheed Martin did a dividend decrease. Of course, that would be in red. But you can see I track the dividend increases, the deposits as well as drips, and they all add up. Sometimes it's a few cents, and sometimes it's several dollars, depending on which stock is dripping. BST is a huge one. That was most of this. But there's some other bigger ones in here, like SCHD, BST were the two biggest that contributed to that 624. So let's go on over to the dividend tracker tab. I think I forgot this on the last video. And like I said before, I started doing these videos January 2021. Here's the starting portfolio value. And really, this money came from just reselling things on eBay and just not spending like my kind of fun money that I allocated to myself, just a couple $100s a month. And there were months I wouldn't spend it. And what I would do is I just put it into the portfolio and saved it. And that's what I was doing investing wise too for this portfolio for a while, until I had some equity in a home I no longer own, and I put it to work. You can see those big deposits right there. And this was during September, October, November of 2022, and it really skyrocketed the portfolio to close to $200,000 mark. But let's just take a look though at 2023 and to the present. And what I've been doing though for deposits though is mostly it's been a couple $100s per month. And right now what I'm doing, and right about here, I started doing $100 twice a week and doing the buy where I let M1 do the picking, and then at the end of the week, I pick 5 stocks. So that's why it's been under $1,000. I'm going to keep doing that for a while. And we can see here is the current portfolio value rounded to the nearest $100. And just look how it's gone up from April from 200,000, and we're in the 270s already. Here's the current dividends paid in October. You can see last month, September, at $16.85. That's the highest the portfolio has ever paid. I think December is going to pay well over $1,700. So we'll have all-time highs for dividends, as well as probably for the quarter as well. But we'll see though, because in this quarter, SCHD paid twice, which made this quarter, Q2 24, artificially low. And then we can see here is the average monthly dividend. We went down to $9.93. We were at $1,006. We're over the $1,000 mark for the monthly paycheck, but it's dropped down, of course, because of SCHD. But we've added $7.09 of monthly income, and then the month-over-month gain at 0.72%, so we're heading back up. And then annual dividend getting close to $12,000 again. And we've had an annual increase in the dividends of $85.08. And we're going to add $100 there for that deposit at $400. And we'll close the video out. We'll just do a quick check on net worth here. In my dividend portfolio, and I'll scroll through it, this is 15% of my net worth. And you can see most of the portfolio is in SCHD. So it's well diversified. And you can almost look at this portfolio as kind of my own created index, because I think it's pretty well rounded and it's done quite well for me. And of course, what I'm doing is not investment advice. You need to do your own diligence and research. And you can see here, SCHD, BST, and then NVIDIA, AbbVie, those are my largest positions. And I'm just going to scroll down so you can kind of get an idea of what's in this portfolio. These are mostly just blue chip, boring companies that return growing profits and growing dividends year after year. And with the exception of really NVIDIA, Their fastest growing days are behind them, but that doesn't mean they're not growing anymore. They're still growing and going up in value. As you can see, this is, I think, the return over uh, the last, no, I think it's just in total. Because look at NVIDIA, yeah, it's at 900%. So this is total, yeah, returns. Some of these are kind of like pretty flat. Oh, well, you have NVIDIAs that are like, 900% returns. Oracle over doubling the money, same with Aflac. I have several that Costco is almost at 100%. Caterpillar's over 100%. KKR, 150% return. But some of these are kind of middling or lower, like Starbucks at less, 7.42%. So I have a good mix of, growth in here and just kind of steady eddies. But Hershey's looks like that's been really the only one that's been struggling. But I think long term, Hershey's is going to be a good investment. And they like to increase that dividend. So I'm not going to get rid of them now. I'm going to probably, that's going to be probably one of my picks on Thursday, Friday to put $20 into, or maybe even more. You can see I'm going to scroll down to the bottom, and Pinnacle West is the smallest position in the portfolio at $790. So back to the net worth statement here. We'll close it out. So most of my money is wrapped up in boring ETFs out here like VYM, VTI, VXUS. And so I have an IRA, a Roth brokerage account. I have a taxable brokerage account over at Vanguard. See a total value of that, $469,000. This is changing as these are live. Here's my 401k with my current employer, and this is from March 2020. I started with them, and almost at $100,000 there. And then over at M1, this is an IRA of pretty much my prior employment when I started kind of my professional career in 1996 to about 2019. This is that portion of my 401k. And I rolled it over here to M1 and almost 700k even there, and mostly in VU, VTI, SCED, a little bit of EST. And then here's my dividend portfolio here, the 273,468. And I have some cash over there at M1, and this is pretty much a 1 year of my expenses over there, earning 4.5% interest. And here's a 6-month emergency fund over at Synchrony, earning 4.3% interest. And then this is more my short term, like 2 months of emergency fund at Capital One. It's at 4.1%, so I mean, not too bad. Not the most optimized. I can move everything over to M1 and get the 4.5%, but this is more immediate money to pay bills and credit cards, things like that, as well as my mortgage. And that's my only debt really, is my mortgage. And here's my current credit card balance at $1787.50, and I don't carry a balance with this, so I want to stress this. And don't feel bad if you do have credit card debt. I used to be in credit card debt when I was going through college, and I know sometimes you have situations where you can avoid it, but don't even think about investing if you have any credit card debt that you can't pay off at the end of the month. Just don't do it. Pay it all, put all your money towards that and pay it off. I have plenty of money. This is what that money over this 13.9, that's just sitting there gaining interest and waiting until this is due. And I pay it off usually about 5 business days before. And so I'm going to let that, earn interest, that 1787 or whatever the final value is, with it being 5 days off from being, due. And then here is my mortgage debt, and a lot of people say, there's good debt out there. I think all debt is bad, and I want to pay this off as soon as possible. I've been incrementing $100 onto my current mortgage payment every single month to kind of make it hurt, and also to kind of pay this down. And I've really been pondering selling this. You can see the sum is at 183,829, which is greater than this, but it really isn't quite yet because I have a tax liability over here on this side with the gains. So it has to go up higher. I calculate it has to be about 190 is the crossover point where I can sell this and then pay this off and also pay the taxes on the gains. So once I get to 190, I'm really going to seriously think about pulling the trigger and seriously lower my expenses, and then take that extra I'm not paying into mortgage and then just invest even more aggressively and get me closer to that finish line of being able to pull back from work and possibly work part-time or take a sabbatical of my own. But we can see here, here's the total net worth of everything. And what some things I don't count collectibles. I don't count my cars. Those to me are, a car especially is a consumable. You're not going to leverage your car to make yourself financially independent. You're going to drive it, and chances are trade it in for something more expensive anyway. So I just don't, I think it's silly to count those things. I even hesitant to count the, my home equity, because I really can't do anything with it. It's the home I live in. It sure will lower my expenses, but that's pretty much all it can do. But it's right now it's a liability as I'm paying for it and trying to pay it off. And also, I calculated my average monthly dividend of all investments as well as my cash as well, the interest. And I've added all that up. And since a lot of these are ETFs, I took the 2023 yearly and then divided that out to get a monthly average and then an amount for each of those. And a lot of people don't count that, but that is going to be income because my plan is to live off the dividends alone and not have to actually sell any of the shares. That's why I started this dividend portfolio, was I didn't want to sell these shares. I want to keep those and just live off of the dividends, the ever increasing dividends. And I was inspired by Jason Fieber, and I would look him up, and he did it very aggressively, way more aggressively than I would like to do, where he gave a car, lived in a cheap, tiny apartment. He's single, no kids. And I know a lot of people can't do that. And to me, it sounds miserable. He moved also overseas. I want to stay in the United States and also have a car still as well and not live quite as cheaply as he does. But, that's his choice. I still admire what he did. So you can see just the average monthly dividend. Once I'm 59 and a half, I'll have access to that as a monthly average paycheck of $3,305. But that's about 9 years away for me. So in 9 years, this could theoretically double, as my portfolio will likely double and my net worth likely will be over 3.5, right around there, if are using the rule of 72. And so that's what I'm looking forward to in retirement, hopefully early retirement. You can see here's the breakdown of everything in my net worth, very heavy in stocks. Here's my home equity, which again, I kind of hesitate to even put in there. Here's my cash on hand, very heavy, but I'm very conservative. I work in an industry which is IT, and I have seen rounds and rounds and rounds of layoffs over my career. Starting in 1996, I almost have survivor's guilt because I was never laid off. I was lucky enough to stay in the industry and keep working and keep building up, this net worth, especially, in my IRA 401k, to keep that going. So one of the secrets I can kind of pass on is don't have any gaps in your employment. Try to always work and build and invest. So here you can see here, here's how it's split out in pre-tax. Can't really touch this until I'm 59 and a half years old. And then here is after tax. I call it freedom of my net worth. And so about almost a 60-40 split. A lot of times it's lopsided for most Americans. It's like a 95, 90-10 split where everything's wrapped up into their home or their IRA 401k. And here's how it's mixed up into U.S. and international. 96% U.S. I argue that most of the top, S&P 500 companies are international anyway. And here I've been tracking my net worth really on this sheet since November of 2022, as well as the total dividends that were received as well. And we can see just starting out at 1.284, we're going to scroll over to where we are now. Well, at least in September, we closed it out at $1,740,200. I'm rounding that to the nearest $100. And here's the dividends that were paid to me for the month. That includes interest. That's September. Here's my W-2 income. Subtract out my expenses. Here was my gap. Hopefully I can inspire everyone to track your expenses. I do a budget video, and it doesn't get near the traction of these videos, but I think it's 10 times more important to know where your money is going, what you're spending your money on, and what you can kind of shut off a little bit so you can have a gap and invest it and to build wealth. Otherwise, if you're like living like this, let me scroll over where I had some expenses that were November, December, where mostly it was due to a sick pet. I had some huge vet bills, and those killed me. I don't know. Think about it. If I didn't have a gap, or if I was, living, zeroing out, or just had $100 here, just think how long it would take for me to make up that 1,000 right here, where I had this, the $1,400 minus 1,467. But I looked in the next month, I actually have a gain now of 5,609. So you can see how that next gap, I made sure to control my expenses and get that back and be above water again. But you can see that month after month of that just keep going up. And so we'll look, just over from November 2022, this is what my gap has been, 33.7. And essentially I can build up a cash position, invest that, etc. So I've been way above water, been fortunate to do so. And I'm not a really high earner. There's people who make a lot more money than me. So that's all I had to show you for the video. Let's see if we timed out over here. Not quite yet. We'll see what those buys were. And again, this is based on my allocation. It was Union Pacific, Illinois Toolworks was a drip, Allstate, American Express, and A.O. Smith. Let me know in the comments below what you're thinking of buying or what you bought today. Thanks everybody for sticking to the end of the video. If you got value from the video, please click the like button. Also subscribe so you do not miss future videos. Everyone have a great week.